All right, let's get right into it. Today, we're digging into the Q4 earnings call for Texas Pacific Land. Now, on the surface, the numbers looked, well, pretty normal. But the way the market reacted? Whoa, that was a totally different story. We're going to figure out exactly what investors saw that sent this stock through the roof.
So here's the puzzle we need to solve. TPL's quarter was mixed. I mean, look at this. They just barely scraped by on earnings per share, a 1% beat. But they actually missed on revenue. Now you tell me, does that sound like the recipe for a massive stock rally? Not usually.
And yet, the stock just took off, closing the day up over 10%. So what on earth was going on? What did the market see that the headline numbers just didn't capture? Let's peel back the layers and find out.
Okay, to really get what happened, we've got to ground ourselves in the official Q4 numbers first. This is what sets the stage for the whole story.
So yeah, revenue was a little light compared to estimates, but check out that year-over-year growth, still a solid 14%. But here's the first real clue to the market's excitement. Look deeper at that adjusted EBITDA and the free cash flow, nearly $120 million. This thing is an absolute cash machine.
So how do we connect those numbers to a 10% rally? Well, it's pretty clear that smart money wasn't getting hung up on one single quarter's revenue figure. Nope, they were looking at something much bigger, the incredible, almost unbelievably efficient business model TPL has.
You see, the market doesn't view TPL as just another energy company. It's this unique three-part profit engine. It's a platform, really. It collects these super high-margin royalties, it runs a huge and growing water business, and it makes money off its massive land holdings with almost no friction.
And if you want to see just how powerful that engine is, look at this number. An 84% adjusted EBITDA margin. Let that sink in. That is practically unheard of. It just screams how capital light their business is. For every single dollar that comes in, a huge chunk of it drops right to the bottom line. It's incredible.
And this is what's feeding those insane margins. The operational side is just firing on all cylinders. I mean, they set new records everywhere you look. Oil and gas production up 23%, and water volumes, they surged over 36%. And as a cherry on top, they signaled just how confident they are by jacking up the dividend 12.5%.
All that strength led to this, just breathtaking outperformance. And this was before the earnings report even came out. The stock had already run up almost 50% in 1 month. It absolutely crushed the broader market and even its own energy sector. The bar was set super high, and somehow they still managed to clear it. But here's the thing. The real story that has the market so excited, it goes way beyond today's oil and gas numbers. It's all about the massive future value that's locked up in TPL's unique assets. It's creating this powerful new flywheel for growth.
And this is where it gets really interesting. During the Q&A session, the CEO, Ty Glover, he lays out this huge vision for getting into the AI data center game. And then, get this, he confirms a strategic partnership with a company called Bolt Data and Energy. Why does that matter? Well, the chairman of that company is none other than the former CEO of Google, Eric Schmidt. I mean, talk about a game-changing stamp of approval.
This brings us to this really key concept, optionality. Investors aren't just putting a price on TPL's current business. They are placing a huge value on the potential of these future businesses. The option to build data centers, the option to create fresh water, the option to mine for critical minerals.
And look, these aren't just some fuzzy ideas on a whiteboard. The company talked about real, tangible projects that are already moving forward. That Bolt partnership is a done deal. The desalination R&D facility is almost finished. They're even actively exploring for rare earth minerals. Any one of these could unlock enormous new revenue streams.
What's really amazing is they plan to fund all of this future growth with incredible discipline. Their spending guidance for 2026 is actually pretty modest, and they're doing all this while sitting on a balance sheet that has absolutely zero debt.
Okay, so what does this all add up to? What's the bottom line for next quarter and beyond? Let's put it all together. Here's our take. You've got this incredibly strong operational momentum in the core business. You combine that with this massive high-margin optionality in things like AI and water that's just starting to get priced in. And for us, that adds up to an outperform rating.
So here's our prediction. We think the market is going to keep focusing on that long-term story, not short-term financials. A little revenue variance here or there won't matter as much as continued momentum in the water business. And the real kicker? Any concrete news on the data center front. That's going to be the #1 catalyst for this stock. So it really all boils down to this. The investment thesis is built on two things: scarcity and optionality. The market is waking up to the fact that TPL isn't just an oil company. It's a one-of-a-kind infrastructure asset, and it's got a clear path to becoming a major player in the AI revolution. You can really think of it as a long-term AI infrastructure play that just happens to have unique advantages in land, power, and water.
This is not financial advice.